Ray Dalio is one of the greatest investors under Warren Buffett. His investment firm Bridgewater resulted in a 14.6 return in 2018. However, what he's really known for is not the billions of dollars that he manages, but his all-weather portfolio. His portfolio that lasts through all market conditions, such as bear markets, recessions, bull markets, consolidation. It lasts through it all. So let me show you exactly what is inside his portfolio so that your portfolio can also become an all-weather portfolio. This is exactly what he's holding in his portfolio. His top holding of 18.4% is SPY, the S&P 500 ETF. What he has here is a lot of diversification. He has long-term bonds, mid-term bonds, short-term bonds, gold, and a bunch of different ETFs. As you can see here, his portfolio is made up entirely of ETFs. What does that mean? It means he likes the diversification. He likes to be able to invest in a single product that is liquid, but also get that diversification factor that ETFs offer. So that's another reason why I promote ETFs, because investors like Ray Dalio loves ETFs as well. Now let's deep dive into each specific ETF that he's holding real quick. The first stock he's holding here is SPY, which is the S&P 500 ETF. Now, this is a great hold for everyone. I recommend this to anyone. Why? Because the average annual return for it is 9.8%. And it offers a small dividend. You have the best of both worlds with capital appreciation and dividends. This ETF tracks the market, so it is diversified between 502 stocks, and it just generates a good return year over year. All right, let's get into the next one. His second top holding is VWO, or the Emerging Markets Index Fund. Now what this is it just tracks the average basket of a bunch of different emerging markets. This means that he gets to invest in emerging markets without being heavily risked because he is diversified in a basket of holdings. So as you can see here, this stock does offer a dividend, or this ETF does offer a dividend, and it usually holds its value well. There's nothing too keen on showing that it increases in value a lot, but it doesn't necessarily decrease over time. So you have price stability and you have that dividend. His third top holding is another emerging markets ETF, IEMG. This stock has the same exact thing as VWO, where the stock appreciation quite isn't there. We're kind of hovering around the same pivot of $50, but we do have that nice dividend. It's very consistent and diversified. Let's get into his next set. This is his fourth top holding, IVV, which is another form of SPY. This is basically the S&P 500 index of the top stocks. So what do we see here? Well, from his top four holdings, we see that he is diversified in the markets. He loves stocks and he loves the economy. He's betting on emerging markets and he's betting on the U.S. economy. So these four are his top holdings, the S&P 500 and two emerging markets ETFs. Now let's get into its bond holdings. His top bond holding is LQD, which is investment grade corporate bonds. So you can get bonds from a varying different places. You can get it from the government, you can get it from corporations, or you can get it from other avenues. However, investment grade corporate bonds right under federal bonds is one of the safest ones, because the Fed can print money, so that's why the Fed usually has the safest bonds, but investment grade is the top rated corporate bonds you can get. So his risk is very low on these bonds, but yet it seems to appreciate over time with a consistent dividend. So that's an amazing thing to see. He loves these ETFs that provide a dividend. His second top holding on bonds is TLT, which you can see here is the 20-plus year Treasury bond, which is a Fed bond. So we have very low risk here, stock appreciation over the long run, and we do have this consistent dividend. It is small, but it's consistent, and that's what you need in the stock market. Just a little bit of money consistently over time is the way that you make money in the stock market. All right, guys, so you can see here that his two top bond holdings are LQD and TLT. Let's get into his holdings of gold. GLD, or S Spider Gold Shares. This makes up almost 5% of his portfolio. This is another way to make your portfolio an all-weather portfolio by also having commodities in it. In addition to stocks and ETFs, having a commodity is a great way to offset recessions and bear market times. During bear markets and recessions, you tend to see spike ups in these commodity prices. For instance, here in the 2007, 2008, 2009, we had the housing market crisis. You can see here that gold went from 65, or this gold ETF went from 65 to around $90-$100. That is a great way to offset your losses in the stock market. So again, guys, this is his portfolio. Let's take a quick look again. So guys, as we discussed, this is his portfolio. You can see here, I will actually link this website below, but his main holdings are, you have SPY, which is the S&P 500 on SPY and IVV. You also have some emerging markets here and here and here. You have gold at around 5%, and then the rest you have some great high-term corporate bonds. So again, guys, this is a way that you won't necessarily beat the market all the time, but you do have an all-weather portfolio, a portfolio that you don't have to worry about during a bear market or recession. All right, guys, thank you so much for watching. If you haven't already, please hit that like button and subscribe with that bell so that you get alerted every single time a new video comes out. Thank you so much for watching.